This isn't a Wall Street fairy tale. This is a story of fortunes made and lost, and then rebuilt bigger than before. These are my rules. Rules that built empires from nothing, and rules that buried the arrogant who thought they were smarter than the tape. I never trusted luck. Luck is for card players. I watched the movement of money. I waited for inevitability. And when the time was right, I struck hard, with conviction. Most traders lose because they crave action. They confuse frantic movement with meaningful progress. They gamble their hope. I didn't gamble. I meticulously operated. This is the difference between surviving 1 year and building a legacy. A gambler risks everything on a single throw of the dice. An operator risks only what is necessary, only when the probabilities are overwhelmingly on his side. He is an executioner, not a speculator. Before I give you the 8 principles I lived by, the foundational bedrock of my success, take one simple action. Subscribe now. It ensures these lessons, written in blood, my own, over decades of error and correction, reach the operator who needs them most. Now quiet your mind. Listen closely. The market is never wrong. You are. There is only one side to the market, the right side, and it is revealed in the price, not your ledger. The sooner you accept that fundamental, unforgiving truth, the sooner you stop trying to outsmart a force of pure, indifferent capital that doesn't even know your name. I spent my early, foolish years trying to impose my logic. I had theories, charts, and confidence, but the market doesn't care for your confidence. It doesn't care about your college degree or your intuition. It cares only about the flow of capital. I remember selling short into a stock that was aggressively pushing upward, convinced it had gone too far and must collapse. My theoretical reasons were sound, but my action was disastrous. The trend didn't even slow down to laugh. It kept rising and I lost badly. That humiliation branded itself into my memory, a permanent scar on my ledger. The market doesn't punish you because it is cruel. It punishes you because you refuse to listen to its clear, indifferent language. From that day, I stopped fighting the tape. Stop guessing what should happen based on your hope or your opinion of value. Start reacting with cold objectivity to what is happening, regardless of your personal theories. Never try to prove the market wrong. You'll only bankrupt yourself trying. Your opinion doesn't move the market. Your conviction is meaningless. Your money does the talking. And if your money's on the wrong side, you're finished, utterly and irrevocably. Buy what's going up. Sell what's going down. This rule is simple, yet its breaking point is where most careers end. It never was my thinking that made the big money for me. It was always my sitting. I didn't buy stocks because they were cheap or because they paid a steady dividend. I bought them because they were demonstrating undeniable upward momentum. Momentum isn't a fluke. It's the indelible footprint of informed money. It tells you professional capital is flowing in, that someone knows something you don't, or that a large controlling interest is accumulating. Most amateurs commit the cardinal sin. They try to catch the falling knife. They seek a bargain, attempting to buy the stock for $5 when the price is screaming zero. But cheap stocks are cheap for a reason, because no one with real power wants them, and the downside risk is still 100%. I made my fortunes on railroads, steel and oil stocks that were already climbing, stocks that felt expensive to the timid. The public called them overbought, speculative, and reckless. I called them winners because the tape confirmed their strength. When a stock breaks out to new highs with conviction, supported by heavy, unmistakable volume, that is not the time to hesitate. That is the moment to commit substantial capital. The same iron rule applies in reverse. If a stock is falling, do not attempt to rationalize why it should stop falling. Sell it or stay out. The trend is your ally, a powerful wave you must ride. The moment you decide you're smarter than that force, the trend becomes your swift and silent executioner. Never enter without a pivotal point. There is no room for hope in trading. Hope is the gambler's drug, a silent poison that convinces you the time is now, based on desire, not evidence. Confirmation is the operator's strategy. I never bought because I felt a certain way or because a rumor passed by. I waited with the patience of a predator for the market to give me the irrefutable, undeniable evidence that the path of least resistance was finally in my favor. Most people lose because they equate activity with success. They have a desperate, anxious need to feel busy, to be in a trade. But trading is not about filling time. It is about ruthless surgical precision. I studied the tape until I could recognize a pivotal point, the precise moment a stock overcame a key resistance level or critical support with overwhelming force and volume, not just a momentary flicker. This was the market expressing its actual, undeniable institutional intent, a signal devoid of noise or subjective emotion. I'd sit motionless for hours, sometimes weeks, ignoring all the chatter and the minor fluctuations, allowing my capital to remain safe, liquid, and uncommitted until that precise point appeared. When the stock broke through, decisively shattering the previous ceiling, that was my green light. Entering too early means your capital suffers the random chop, leaving you vulnerable to whipsaws and wasting precious resources. You are often stopped out prematurely by market noise, only to watch the real move begin moments later, adding psychological injury to financial loss. Entering too late means the best, most explosive move is already gone. But entering with confirmation at the pivotal point, with iron discipline, gives you the highest mathematical edge and the lowest psychological burden. I never guessed. I positioned my capital with the certainty of a marksman, waiting for the target to align perfectly with the crosshairs. Do not anticipate the market's move. Let the market deliver the command, then obey it. Position size matters. Only fools go all in. Position sizing is not just a defensive tactic for risk management. It is a fundamental strategy for validating your analysis. I built my positions as they proved themselves worthy of my increasing belief. If a stock moved in my favor, I added to my winner, methodically increasing the pyramid. If it moved against me, even slightly, I cut my loss instantly. You do not, under any circumstance, average down on a loser. That is not courage. That is madness, an act of emotional desperation that compounds your original error. When a stock falls and you buy more, you are simply doubling your exposure to a fundamentally flawed idea, guaranteeing the quickest path to ruin. When I planned a full trade, say for 5,000 shares, I would never buy my full size at once. I'd begin with a minimal pilot position, 1,000 shares to test the water. If the stock advanced and held, confirming my initial read, I'd buy another 1,000. Only if the strength continued and the market showed me I was right by rewarding the initial commitment would I commit the final amounts. This is the definition of pyramiding. The market is effectively paying you for the privilege of increasing your risk, funding the larger position with profits from the smaller ones. This system ensures your capital is concentrated only in ideas that are demonstrably working. Too many traders bankrupt themselves because they fall in love with an idea, over-leverage based on pure conviction, and bet everything on the first unconfirmed move. They lose fast and painfully. Your position size must never be larger than your emotional and financial discipline can comfortably handle. The trade should be small enough that volatility, the noise, does not force you into a panicked, irrational exit. I didn't build empires overnight. I built them one confirmed, intelligently pyramided move at a time. Exits matter more than entries. Anyone can buy a stock. It takes courage to sell. How you exit determines whether you lock in a fortune or just walked away lucky one time. I made my first real fortune in 1907 not by predicting the top of the crash, but by recognizing the final inevitable climax and knowing exactly when to get out. While others clung to hope and delusions, paralyzed by fear of missing the last penny, I sold. My goal was not perfection or catching the top tick. It was to protect profit and preserve my core capital for the next opportunity that the market always delivers. I watched the tape for clear signs, volume drying up on advances, momentum weakening, or a decisive, clear reversal signal at a new resistance level. These are not accidents. They are final objective warnings. Most traders fail because they turn a substantial winner into a catastrophic loser because they allow hope, that whisper of greed, to replace iron discipline at the critical moment. I never married a trade. If the market turned, I turned with it instantly. Sometimes that meant giving up the last few points of potential upside, but far more often it meant keeping every dollar I had earned while others watched theirs vanish into thin air. It's not how high the stock goes. It's what you successfully walk away with. You make the money when you exit, not when you enter. A good trade is only a guess until you close it on your predetermined, disciplined terms. Don't listen to advice. Listen to the market. The most catastrophic losses of my career did not come from a mistake in my chart analysis. They came from listening to voices, brokers pushing inventory, friends selling dreams, or newspapers peddling yesterday's news. They all had loud opinions. Sometimes those opinions sounded brilliant, logical, and tempting, but they were never based on the tape. They were based on ego, greed, or unsubstantiated rumor. I once held a massive position ignoring clear, blaring sell signals from the chart because someone I respected promised me inside information. I waited when I should have been liquidating, and the result was devastating, a total erosion of profit. That was the last time I let another human voice drown out the clear, sovereign message of the market. The tape is your only honest record. It shows you the cold truth, volume, direction, and momentum. People will always try to sound smart, to make a name for themselves, but the market doesn't reward clever talking. It rewards being right and acting decisively. And being right comes from watching the price, not talking about the price. Don't take tips. Don't follow the emotional herds who are always late. If you can't trust your own cold, objective analysis of the price action, you have no business risking a single dollar of your capital. Separate emotion from execution. Trading is not an emotional endeavor, but we, the traders, are inherently emotional, and that is the weakness that must be excised. A man must believe in his judgment to survive this high-stakes game, but he must execute without feeling or hesitation. I've lost fortunes not because my system failed, but because I allowed fear, the panic of the moment, or greed, the desire for just a little more, to seize the controls. I've chased trades out of spite when I was slighted. I've hesitated out of paralyzing fear of loss. Emotion clouds judgment like a thick fog. It delays necessary action until it's too late. It whispers seductive lies about turning a loss into a profit by waiting just one more day. When you allow your feelings into the decision-making process, you are fighting two exhausting battles: the external war against the market and the internal war against yourself. You cannot win both. I had to build a personal fortress of habits, rituals, and absolute rules that I followed regardless of how I woke up feeling that morning. If a trade hit my stop, I was out. No debate, no panic, no hope. If the signal came, I entered, no hesitation. Discipline is the steel that separates you from the noise, the essential ingredient that takes you from being a desperate gambler to being a professional operator. The biggest profits come when you do nothing. This is the truth that separates the amateurs who generate noise from the few professionals who generate wealth. The real money is made in the patient, stoic waiting, not in the frantic trading. Everyone wants activity. They want to feel productive, to generate a commission or a story. But some of my biggest career-defining profits came when I did absolutely nothing but sit on my hands. I entered the trade, the setup was perfect, the price moved in my favor, and then I just sat, unmoving. I didn't tinker with the stop. I didn't take small gains out of anxiety. I let the market work for me, allowing the natural trend cycle to play out. Most traders destroy their profits by overmanaging, cutting a winner too early, or chasing a new setup when the current profitable one is still running. Why? Because doing nothing feels like a loss of control, a violation of the gambling spirit. But that's the great paradox. You gain ultimate control when you learn to let go of the small movements. When the trend is in your favor, your job is not to outthink it or micromanage it. Your job is to hold. Patience pays more dividends than raw analytical talent. Discipline to enter is valuable. Discipline to exit is crucial. But discipline to wait, that is the true quiet location of a lasting fortune. Learn from losses. Don't excuse them. Losses are your unavoidable tuition. They are a necessary cost of doing business, but how you react to them defines your financial and mental longevity. There is nothing new on Wall Street. Every generation repeats the same mistakes because they refuse to study history and acknowledge their own flaws. When I lost money, I never blamed the market, the news, or the broker. I blamed the one constant, myself and my broken rule. I once gave back an entire fortune, not because my method suddenly stopped working, but because I stopped following it. I ignored my stops, let the position get too large, and let pride speak louder than the price. The resulting loss was catastrophic. Not just the money, but the time, the momentum, and the brutal crushing of confidence. But I didn't hide. I didn't make excuses. I sat with the pain, dissected the mistake in my ledger, and wrote it down as an expensive lesson. Every mistake carries a hidden lesson, and the trader who ignores it pays the tuition but fails the class. Stop protecting your ego. Start protecting your capital. Don't justify a bad trade with rationalizations. Dissect it, understand its root cause, and purge that behavior. The only thing worse than suffering a loss is repeating it due to denial. Success in trading doesn't come from a flash of inspiration or a crystal ball. It comes from structure, from rules, from system. I didn't rely on luck. I built a machine of execution, and I operated it without hesitation. Rules for entry, rules for exit, rules for size, and rules for sitting. Each one protected me from the most dangerous threat, myself and the noise of the crowd. I lost everything, yet I came back repeatedly because I had the structure. You want to survive this game? Stop guessing. Stop hoping. Start building a personal code of conduct. Build a system. Commit to it with religious fervor and respect it more than your own deeply held opinions. You don't need luck. You need discipline. You need unwavering control. You need rules. If these words hit you, if they confirm the brutal truth you already know about the unforgiving nature of this game, it means you're ready to stop gambling and start operating. This is your personal mandate. Leave a comment below with your favorite rule and what immediate change you're making to your discipline today. Now go, you have the map. The execution is entirely yours.